FOMC meeting just changed crypto. Powell sent hidden message to crypto holders. 99% missed it. 1% started the historical rotation. Here's what you missed and how it will change #crypto. Before I begin, I've spent as much time on this thread as I usually do over several days of work, just to bring you the most valuable insights. Follow and turn on notifications. More deep insights and analysis are coming. Don't miss out. 1. The Federal Reserve kept the key rate in the 4.50% range, marking the fourth consecutive hold. Only a small portion of committee members expect rate cuts by mid-2025, a signal that quick changes are unlikely. However, in his speech, Powell subtly hinted at a possible course change earlier than expected. 2. Why isn't the rate being lowered? The reason is that inflation still exceeds the Fed's target. The Consumer Price Index stands at 2.4%, core inflation at 2.8%, while the goal is 2%. Therefore, the cut is delayed and tight credit conditions may linger longer than anticipated. 3. The economy shows typical development. The labor market is stable and growth persists. However, risks remain: trade barriers, geopolitical tension, and high service prices. This forces the Fed to postpone the rate cut, even though it is inevitable. 4. For cryptocurrencies, this signals the start of a prolonged accumulation phase. The market is entering a quiet period when major investors build positions while broader participants remain passive. This period is crucial for setting up the next large-scale pump. 5. Altcoins haven't started moving yet because big capital hasn't entered. Investors are focused on specific promising projects rather than throwing money into random low caps. Bitcoin holds the spotlight until liquidity emerges. Others remain unnoticed. 6. Bitcoin remains stable, holding above $100,000, with ETFs bringing consistent capital inflows. Everything is currently built around it, so institutions are in no hurry to invest in the next assets. Altcoins are stagnant not due to problems. There's just no money for a push yet. 7. Until the Fed begins cutting rates, the market can't enter a bull phase. Rates remain high, meaning liquidity hasn't returned and capital is on hold. Without cheap resources, big players won't activate risky strategies. That's a basic fact. 8. Pressure on Powell from Trump is intensifying as he publicly called him a real moron and urged resignation. Demands are to either finally cut the rate or step down. The rhetoric is becoming extremely harsh. The regulator is struggling, and the market increasingly sees that the pause can't last forever. 9. Now is the perfect time to decide where to enter before everything starts to rise. Powell didn't give a direct signal, but the market is already reading it, so now is the time to prepare for the growth phase. It's better to enter before the pump starts, because later the investment won't yield the same profit. If you like this thread, don't forget to follow me. More valuable content is coming that will help you stay one step ahead. Like, retweet, and leave a comment. Your engagement helps me create even more interesting content.